Hi everybody, welcome to the Attract Capital webinars. I'm Janine. I'm with David, the CEO of Attract Capital.
Hi everybody.
Today we're going to be getting David's view on the economy right now and where it stands. So we know that right now, luckily the economy is in a stable place, unemployment is pretty low, and we also have a good growth rate that's happening. So David just went to a conference in Vegas, and he was able to pick up on some more information from some inspiring speakers. Would you like to share some of what you learned?
Sure, absolutely, Janine. It was a great conference. It's called the Structured Finance Industry Group. So there were a lot of securitization companies, people that package up car loans and mortgages and all different types of loans, and they sell them in the public market. So these people are at a very macro level, and they have interesting views. What we found out is that the economy, nobody really sees a risk to a recession in 2019, which is good for us all.
That's great.
They think maybe in 2020 there's a probability of a downturn, but when the information I got, and there were some real luminaries. There was the former chairwoman of the Fed, Janet Yellen, who is about as a luminary as you can get on the economy. There were two women. One was the chief strategist at Citibank. The other one was the head of the investment committee at MetLife. And one of the things they said is that the consumer economy, sort of household income, is really in a good position, that most households have really paid down a lot of their debt, and they're not nearly as indebted as they were prior to the big meltdown in 2008, before the financial crisis. So they don't see any risk from people defaulting on mortgages. They don't see risk from people defaulting on car loans, which I thought was really great.
Yeah, that is good to know.
And so it's always a parlor game for people to try to determine where the next, what could trigger the next problem in the economy and cause a recession. And so what they said is that the corporate loan market, which is both the broadly syndicated loan market as well as the private debt market, they see those loans getting a little bit stretched in terms of they're aggressive, they're being made at higher multiples, those loans are being issued, and the covenants that accompany those loans are what they call covenant light. So they're seeing some signs of excess, but they're not that worried about that, because really what will happen is if big companies default, they'll just convert those loans into equity. It's very different than if you have thousands and tens of thousands of families that are defaulting on their mortgages, as opposed to big companies, because big companies will get together with their creditors, they'll figure out a solution, they'll do a restructuring, and then they'll move on. So I felt very confident that the economy is strong. I felt there was a lot of mention of optimism, and we've talked about this in the Attract Capital newsletter. Small business optimism is at an all-time high, and it continues at very high levels. So I think all in all, the economy is in a really good place, and there's really nothing out there that people are looking at. And one of the interesting things is that Janet Yellen was asked about interest rate increases, because the Fed has raised interest rates a lot. And she kind of said, well, there's a chance that interest rates get raised, there's a chance that they don't get raised, and there's a chance that they... Right, and it was kind of like she was speaking out of both sides of her mouth, but what I took away from the way she said it is that she doesn't think that there will be any more interest rate increases this year, that the Fed is in a wait-and-see mode, because everybody has been complaining a little bit that the Fed has increased rates pretty aggressively. So it was a great trip. We learned a lot about just sort of the economy. We learned a lot about these structured finance organizations, and I think the economy is really in good shape.
So the horizon's looking pretty clear right now for the economy. It's looking...
I think so, and I think what it also underscored, as it relates to Attract Capital and the M&A market, that there's a ton of capital available in the market. You have private equity funds, you have private debt funds. Private equity funds are sitting on nearly I want to say $500 billion of dry powder. Private debt funds have about $700 billion in dry powder. So there's huge amounts of cash.
It sounds like opportunity. So is it a good time, you'd say, to make some deals?
I don't think Attract Capital has been around since the year 2000, and I've been in the deal world since 1989. So it's a pretty long time. That's 30 years. I don't think there's been a better time to be out there in the market than there is right now, because there's so much money and they're chasing they're chasing good deals, and there's only so many good deals. So if you're a company that's looking to expand, if you're an owner of a business and you're looking to sell, if you're a company and you're looking to buy another company,
It's a good time.
there's a lot of money out there. You really should be thinking about accessing it and thinking about how you can strategically weave it into your business plan.
Well, that's great. So you guys heard it right from the source himself. It's a good time. If you have more information, come reach out to David, find out more about Track Capital, get some more information on more conferences that he's been to, or how he can help you with all of your deals as well. So thank you so much.
Thanks, everybody.